YouTube, welcome back to the channel for another video. Today I'm just going to go over my trades from yesterday from NASDAQ from February 3rd, and I just want to do a quick video and a little breakdown of the trades, but I also want to talk about the real psychological point in trading of why you do not close your trades early unless you have a very specific rule and reasoning to closing your trades early, which I really don't unless it's like the really high impact news like for the Fed speaking or FOMC news or NFP news like that. But any other time I would just hold my trades. So I just want to talk about why it's really important and go over why I actually how I went against it and how it bit me in the butt a little bit, because you should always hold your trades. So let's go over that a little bit. So let's jump into the trades and see why or how my trades played out yesterday. So just looking at the trades from yesterday, the reason I took my trades was on the 15-minute. I've seen these sweeps of liquidity, this sell-side sweeps of liquidity here. I know price is just playing around. It was Monday, just gonna let the price settle a little, so I didn't take any really early trade. It was high impact news at 10, and I know trades swept here or swept liquidity here, then just pushed up. There's a lot of bullish continuation momentum. So I just took a buy here to try to capitalize on this momentum and see if the price wanted to push higher. Then I saw that it was starting to play around a little bit around the entry. Then I saw that it was a little more buy side switch liquidity here, and then it swept the liquidity. And then on the 1 minute I saw this push after this sweep of liquidity here. Saw this push, and then I saw that it was a lot of bearish momentum, so I just took a hedge sell here and trying to just protect and capitalize, make sure my account got profit either way. But I hedged here, and I usually don't like to hedge too much, so it goes with and against. It can help you protect your capital, then it can also minimize your risk a little bit. So it's good and bad to use it. You gotta know just when to use it. This is the beginning of the week. I don't have any capital. I haven't lost any capital yet, so it's it's an opportune time to use it and try just to protect my trades. So we'll see what happens here when it plays out. So in this case, it was a pretty valid setup to take the hedge and the sell, but it just didn't go through. We're seeing here that it lost, and then the buy is still valid, even though it gets really close here. I know it's really sometimes it can be a little nerve-wracking to hold trades a little longer than you want, and when you're seeing this much ranging around your entry and then going down near take or stop loss a little bit, it can be nerve-wracking, but you just got to trust your analysis and hold your trades. And then you see that it hit stop loss here, so that's minus 1% for me if I was risking, let's say, 1%. Then I can see it finally goes into profit during the PM session and for New York session, and then it keeps going up and it gets near take profit, but then during the end of the session it comes back down, and I closed it out at break even around 4 o'clock. Yeah, around like 4 o'clock. This broker looks a little different. I don't actually analyze on this broker, just looks a little different here. So I closed around right here, right at break even basically. And yeah, and I didn't really have a reason other than I just really didn't want to hold it overnight, and I know it was a Monday and it looked like it was just consolidating and playing around, so I just wanted to close it once it got here just to not lose any more risk or lose any more capital, which kind of happened with the hedge. So it's I'm already down 1%. Let me just make sure I don't lose more percentage here. And that ended up costing me, because it literally turned right around. Not this instance, not showing on this broker, because you see it skips like a whole hour in this broker, but on a different broker you'll see it just kind of shoots a lot straight back up. It gets a lot of momentum. It's a little hiccup right here right before price closes at 5, and then you see it opens up and there's a gap, and then it hits take profit as soon as the gap opens up at 6. So it pretty much just reversed instantly as soon as I closed it and hit take profit. And that's the key thing in trading. You don't want to close your trades early ever, unless you have a specific rule, which I actually do, but I just didn't do it here. Unless you have a specific set rule why you would close it early, don't close your trades early. Just let it go and just let it hit either take profit or stop loss, and just trust your analysis, because I didn't do it here and it came back to bite me. So I always recommend holding your trades. This is why you hold your trades. It pays to hold your trades, literally, because it just reversed as soon as I did it. As soon as I closed, it reversed immediately. The next candle started to be a bullish pin bar candle, I think, on a different broker, and then it just reversed and it took off. So yeah, I mean, this All in all, it was a good trade that I took this setup. I just should have executed better, just held it and trusted the setup. Of course, I don't like holding overnight, but it's still a valid trade to hold overnight, and it's still valid that it went through. I should have just trusted it and held it. And this hedge, it was a valid trade to take. It's just it comes with it. You sometimes you hedge, sometimes it wins, sometimes it doesn't. It helps try to protect the capital. It just didn't work out in this instance, so this is why I should have held my original. So I could have been up, at least 1% for the day. If I was risking 1% or whatever I was risking, I could have been up for the day because this win would have outweighed this loss. So it pays to hold your trades, and I just wanted to make this video, just go over these trades and show you why you should always hold your trades unless you have like a certain specific rule that you've tested and you are confident and saying, okay, I'm gonna not take this trade or close it out early for this reason. You shouldn't just do it out of fear or any other reason. You don't know what's going to happen next whenever you're trading. That's a huge key. And I thought what I knew would happen next would just come down here. It would either consolidate or hit stop loss. But as soon as I closed out, it just reversed hit take profit. So you don't know what's going to happen next. Just trust your system, trust your strategy, and just trust your analysis that it's going to either hit stop loss or take profit. It's going to do one or the other. Just let it do what it's going to do. And if I would have done that, it would have hit take profit, and it would have had a winning day yesterday. So with that said, I'll wrap it up here. Just remember, it's always key to just hold your trades and trust your analysis. And I'll see you guys next video. Make sure you like and subscribe, and check out some more content on our page.